Now, Pick n Pay was founded on 4 small stores in the Western Cape by Raymond Ackerman in 1967. It now operates more than 775 supermarkets, hypermarkets and family stores. Pick n Pay has a market cap of 20 billion, a price to earnings ratio of 26 and a dividend yield of 3.1%. Looking at Pick n Pay, we touched on it a little bit, but we need to compare it to ShopRite. Where do we stand with Pick n Pay at this stage?
No, look, it's had a tough period because it's lost market share. They've had a number of CEOs come and go. Sean Summers, Nick Badminton. The position is currently vacant. Richard van Rensburg is sort of an acting. And part of that comes from the family control because, as you know, you've got Pick n Pay stores, then you've got Pick n Pay Holdings, and then you've got the Ackerman family on top of that. So it's one of those old-style family anachronistic type of structures. They will tell you that it gives them long-term security. They had a bit of a misadventure in Australia, and they're kind of late to the party in terms of the distribution centre build-out that the others have already done.
Okay, so they're out of Australia with regards to that whole Franklin's deal. Your thoughts on Pick n Pay? You did touch on it a bit.
Yeah, we think yesterday's hero, late adopter of the modern retail model, which is, your sophisticated supply chain, centralized buying, big regional DCs, and they're up against really tough competition. So, it is a potential for a turnaround, but we feel that management need to be a lot more bolder and cutting edge.
So, stock price been quite volatile.
Well, and the interesting thing is that it trades on a very high price to earnings ratio. So I think what Anthony's alluding to is the fact that people expect it to make a recovery and a bounce back. Which, I don't have a problem with that. That's normally what happens with well-established operations that go through a bad patch. Then they solve those problems and then they come back. I think the problem is that the share price already reflects some of that. So the institutional market, probably those people in Cape Town who love their Cape Town companies, have been buying this thing up because they anticipate strong results, and that's why it's on such an expensive rating. I'm with Anthony on this one. I think it's a bit of a kind of show me, tell me story where, everybody's anticipating the recovery, but it's not really visible in the numbers.
So a lot of pressure coming through for Pick n Pay. Hot or not for you?
Not hot. For me to turn buyer, I'd need to see them definitely fix a few things in their business. Their hypermarket strategy is in question. It's encouraging to see that they did amend their legacy labour agreements with the unions, which was inflexible. But unfortunately, change management comes with the perverse effect of, in the short term, costs actually rise before you see the benefit in the long term. So I think if you're a holder of Pick n Pay, you have to be patient.
Paul?
One more question. You guys are very well plugged in with your business model here and elsewhere. Do you think there's any credence to the story that maybe Pick n Pay is in the sights of a potential acquisition like from Tesco's or Carrefour or something? Or do you think that's just one of those stories people have been throwing out there? Yeah,
we hear these stories come across our desks all the time. I think often it's just traders trying to create some flow. Never say never, but I think a lot of our retailers have been looked at by the bigger internationals, and if they haven't made an offer by now, I don't think one's forthcoming. Maybe if you start to see the ship turn, maybe it's back in play.
Okay, hot or not, Paul?
No, not hot for me, I'm afraid. Too expensive given where it is at now.